Most people believe Bitcoin crashes because it is risky, unstable, or broken. They think it falls because something went wrong, but the truth is far more uncomfortable and far more powerful. Bitcoin does not crash because it is weak. Bitcoin crashes because it is preparing for something big. Every major crash in Bitcoin's history has happened right before its most aggressive rallies, and this is not coincidence, luck, or chaos. It is how the system is designed to move money from emotional hands to patient ones. When Bitcoin drops 10, then 20, then 30%, panic spreads instantly. Social media fills with fear, YouTube thumbnails turn red, and suddenly everyone who was bullish yesterday disappears. Confidence evaporates. People start saying this time is different and Bitcoin is finished, but here's the first truth most people refuse to accept. Bitcoin has never entered a massive bull run without first destroying confidence. Not once. Every single rally that changed lives was born out of a crash that convinced most people it would never happen again. Markets do not move on logic, fundamentals, or intelligence. Markets move on liquidity. And liquidity comes from pain. Big money does not buy when everyone is confident and euphoric. Big money buys when people are desperate to sell, when fear is extreme, and when belief is gone. That is why crashes happen before rallies, not after. A rally needs fuel, and fuel only appears when people panic. Price does not move to reward you. Price moves to maximize losses. If most people are bullish, price must go down. If most people are bearish, price must go up. This is how markets are designed. They exist to transfer money from the impatient to the patient, and fear is the fastest tool to make that transfer happen. Every Bitcoin cycle follows the same structure. First comes steady growth, where confidence builds and people feel smart. Then comes overconfidence, where leverage increases and risk disappears from conversations. After that comes a sudden crash with no warning, wiping out stop losses and shaking belief. Then a relief rally appears, convincing people the bottom is in. That relief is followed by a deeper drop, the final capitulation where hope dies. After that, Bitcoin moves sideways for weeks or months. Volume disappears, interest collapses, and nobody cares anymore. And then, without warning, Bitcoin explodes upwards so fast that most people are left watching from the sidelines. Crashes are not failures. Crashes are preparations. If Bitcoin kept going up smoothly, nobody would sell. Without sellers, there is no liquidity. Without liquidity, there is no rally. So the market must manufacture fear. Fear creates sellers. Sellers create opportunity. Opportunity creates rallies. Every crash produces terrifying headlines. Every headline amplifies panic. Every panic creates selling, and every sell order becomes a buy order for someone else. The question is not who is selling during crashes. The real question is who is buying. It is not beginners. It is not emotional traders. It is capital that understands cycles and does not panic. The most dangerous moment for retail investors is not the top, it is the bottom. The moment when price has fallen so much that belief is gone is the exact moment accumulation begins. At tops, people feel invincible. At bottoms, people feel stupid. Markets are designed to exploit that emotional swing. By the time Bitcoin starts moving up again, most people have already sold and emotionally disconnected. Notice how bad news always appears at the bottom and good news appears after price has already gone up. News does not move price. Price moves first and narratives follow. Crashes allow accumulation to happen quietly. Rallies attract attention only after positions are already built. There is also a hidden mechanism most people never talk about: liquidity hunting. Retail traders place stop losses below obvious levels. Those stops are visible. Visible liquidity becomes a target. Price moves down precisely to those areas, not randomly. When stops trigger, selling accelerates, fear increases, and price collapses quickly. Then silence follows. That silence is where accumulation happens. After crashes, Bitcoin rarely rallies immediately. Instead, it moves sideways. This phase is where boredom replaces fear. People leave the market. Volume dries up. Interest collapses. This is not weakness. This is strength. Big money does not chase green candles. It builds positions quietly while nobody is watching. Every cycle has the same lie repeated again and again. This time is different. People said it during regulation fears, exchange collapses, and macro tightening. Yet Bitcoin survived everything. What changed was not Bitcoin. What changed was who held it. Each crash transfers coins from emotional holders to long-term holders, leaving fewer weak hands every cycle. Retail always misses the bottom because bottoms never feel safe. At bottoms, news is terrible, price action is boring, and confidence is gone. That is why bottoms feel like mistakes, not opportunities. Rallies only feel obvious in hindsight. When Bitcoin finally rallies, it does not give warnings. It moves fast on purpose. If price moves slowly, people would re-enter comfortably. Instead, price explodes, forcing those who sold lower to buy back higher. That buying creates momentum. Momentum creates headlines. Headlines create FOMO, and the cycle begins again. Crashes hurt because people are overexposed. Leverage turns normal volatility into emotional trauma. Markets punish excess. Every crash reminds you that position sizing matters, patience matters, and time matters more than timing. Long-term holders win not because they are smarter, but because they understand cycles. They do not chase tops. They do not fear crashes. They zoom out. Bitcoin's largest gains have always come after its worst drawdowns. That is not luck. That is structure. Crashes reveal your strategy, not the market's weakness. If you panic, you are too exposed. If you are calm, you are positioned correctly. Most people believe rallies create wealth. They do not. Crashes create wealth. Rallies only reveal it. Bitcoin does not reward intelligence. It rewards patience. It does not reward prediction. It rewards survival. And it does not crash to destroy belief. It crashes to test it. Those who pass the test ride the rally. Those who fail fund it. So the next time Bitcoin crashes, ask yourself one question. Is this the end or is this the beginning? History has already answered.